Hey everybody, my name is Justin. Thank you so much for joining me today. Today I want to talk about Boeing, ticker symbol BA. This is certainly one that's been in the media lately with the whole new variant that's going on. They found in South Africa and then also here in Europe here in the last 24 hours. And Boeing took a huge hit this past week along with other companies that are tied to travel. And so I thought I'd revisit Boeing and kind of see, what this company is worth. And this is a full stock analysis on Boeing. So we're going to talk about management team. We're going to talk about Moat. We're going to do a 7-year financial review of Boeing. And then I'm going to do an intrinsic value calculation of Boeing, what I think Boeing is worth and what I would expect to get for return on investment from this company on today's stock price and potential future stock prices. So first up, let's talk about the stock price now and kind of look at a 5-year chart. And Boeing, has been anywhere from $446 at the high point in January 2019, all the way down to about $89 March in 2020 when the whole market collapsed at that time. However, even though that Boeing has been through a lot over the last few years, you talk about the 737 MAX planes that had the software issues and the horrific plane crashes that were caused because of that, which really started hurting the stock back in 2019. And then the whole, pandemic that happened as well in 2020 really pulled down the stock price quite a bit. So I was actually surprised to see if someone were to buy the stock 5 years ago, they would actually have a positive 32% over that time frame. All right, so let's go on and talk more about the business. And Boeing is a major aerospace and defense company. The firm operates in 4 segments: commercial planes, defense, space and security, global services, and Boeing Capital. Boeing's commercial airplane segment generally produces about 60% of sales and 2/3 of operating profit. Keep in mind, this is historical numbers. This is not what happened this past year. This is historical. 60% come from commercial planes. And it competes with Airbus in the production of aircraft ranging from 130 seats upwards. Keep in mind that Boeing and Airbus are really the only ones in the commercial plane business. So it's a duopoly there. Boeing's defense, space, and security segment competes with Lockheed, Northrop, and several other firms to create military aircraft and weaponry. The defense segment produces about 25% of sales and 13% of operating profit, respectively. Boeing's global service segment provides aftermarket servicing to commercial and military aircraft and produces about 15% of sales and 21% of operating profit. Now, this is a snapshot right out of the last earnings call. And it's kind of interesting when you look at Boeing and all the issues they've had over the last 2 years, in particular with the whole, with the market and the pandemic that we've gone through. People want to know when is commercial flights, when is travel going to kind of get back to normal? Because Boeing really stock price and revenue and all that is kind of tied into that significantly. If 60% come from commercial planes, the sales anyway. And so what they're saying is that really levels return to the 2019 levels by 2023 to 2024, return to long-term trend a few years after that. So they're saying probably 2 to 3 years out, that's when they kind of expect to get back to what we're used to be in 2019. Obviously, we found out there's a new variant this past week that's impacting the market, impacting Boeing. I think Boeing dropped 5 or 6% just a couple days ago alone. So that's something to keep in mind too with Boeing as new variants come up. The stock price is really going to fluctuate as there's fear that goes into the market on what that's going to do to potential travel bans just in general. Next up, let's talk about another snapshot right out of their recent presentation that they did for their quarterly review. And this is on the commercial airplane side, and they see continued momentum on safely returning the 737 to service. And because the deliveries have been impacted, they record about $183 million of abnormal costs in the quarter and anticipate about $1 billion of additional costs because of this. Continue to expect first 777 deliveries in late 2023. What's really important to note here is their backlog. So they have over 4,000 airplanes in their backlog, valued at $290 billion. What's really why that's so important, even in the heyday of Boeing back in 2018, 2017, 2018, they were pushing about 100 and 120 billion dollars worth of revenue. So you're talking about 2 to 3 times amount of backlog compared to where they were doing in revenue. So that is a lot of backlog still. All right, so let's go on to the next slide here. This is on the defense, space, and security side. They had a number of different awards in the quarter. Something I want to point out is the backlog of $58 billion. Now, as far as global services go, the commercial services recovering from whole Rona impact still. Outlook for government services remains pretty stable, though. Total backlog here is $19 billion. So you're talking about $370 billion in backlog between commercial planes, government contracts, and their global services. So even though there's a lot of negativity around Boeing, the future still looks pretty positive on that front. Now, as far as cash and debt balances go, again, this is right at their last quarterly presentation. They're saying roughly about $20 billion they have in cash and marketable securities at the end of the last quarter, compared to about $60 billion worth of debt. Now, keep in mind, back in like 2018, they had about $20 billion in long-term debt. Now it's $60 billion, so you're talking like a 3x in long-term debt, which is significant and just something to be aware of about this company overall. What's interesting about their presentation that they said in there is that, they're in a very, very good place cash first debt wise. What's interestingly though is the company's not really paying off their debt. So their debt went from 20 billion in long-term debt to 60 billion. Their cash has been increasing over the last year. It's because they're not paying down their long-term debt. So there is some concern out there. Do they think there's another crash that might be coming, especially on the travel ban side? So they're just trying to prepare for that. All right. They're headquartered in Chicago, Illinois. They have a $123 billion market cap. They have 141,000 employees. They did about $63 billion in revenue over the trailing 12 months. That's about half of what they really have done in their heyday back in 2018. Right now, PE is NA. It's negative. They have negative EPS over the last year. Now, they are expected to have positive EPS and positive earnings going into 2022, but certainly the last 2 years have not bode so well from them on the P&L side. All right. So as far as the moat goes, is what gives Boeing a competitive advantage over their competitors. And really, there's two things here that I could think of. One, they have a very, very strong brand moat. People know Boeing. I think Boeing, I know they've had a couple rough years, but historically, they have a really, really good reputation. Overall, they have a lot of government contracts. We're going to do this request for proposal out there. We want you to apply for it, knowing that Boeing's probably just going to get it anyway. But I think they have such a good relationship with the government in general, with the planes that they make, and that is huge. And they have a duopoly between Airbus and Boeing for the commercial side of things. They also have a switching moat. There's very few competitors in their space, and if the government were to switch, buying some of the planes from Boeing instead of maybe moving over to Lockheed Martin or another company like Northrop, it's going to cost the government more money to switch over as these other companies try to have to increase their R&D just to build out these specific planes. So it makes sense for them to stick with Boeing at this time. So I do think they have a very strong moat overall. Now, David Calhoun is the CEO of Boeing currently. He's the president CEO since 2020. And I would say in general, Boeing has had a really tough time with management. I think this is the third set of management that they've had at the top over the last 3 or 4 years. So it's been very, very rough. Now, he has been a Boeing director since 2009, which I think is good. So he's actually seen the company in the heyday, and he's also seen the company at its worst right now. So at least I think he has a good idea where they need to go on that front. Senior Managing Director and Head of Private Equity Portfolio Operations, the Blackstone Group from 2014 to 2020. He also previously held a vice president role at General Electric, currently a director at Caterpillar. So next up, let's talk about insider trading. And what we have here is over the last year, there's been 4 sales worth about $6 million in total. So not really a whole lot going on there. And here's the different people. They have the controller. They have a couple of vice presidents, senior VPs, executive VPs that are selling. So overall, there's not a whole lot of insider trading that is going on. But the ones that have been going on, there's just been selling going on. Now, as far as super investors go, there are a couple of them that own Boeing. We have Hillman Value Fund, and we also have David Rolfe as well. And as far as recent activity, there's really nothing there that we've seen. However, I do want to mention that there is a super investor that I follow that doesn't show up on here, and that's Phil Town. Phil Town was very bullish about Boeing, and he did recently sell, I think in the October timeframe, of Boeing, stating that he was concerned that they're hoarding cash and not paying any of their long-term debt off. And basically the story has changed a bit with Boeing, in particular management overall. So he did sell. So that's something important to note there. Now we're going to take a look at financials in a 7-year review. And it's just going to be really bad. The last 2 years have been pretty horrific as far as the financials go, so which we'll see that. But we're going to talk about the different growth metrics here: sales, earnings, operating income, free cash flow, book value as well. We're going to talk about management effectiveness from return on equity, return on invested capital, long-term debt payoff. And we're also going to look at margins for Boeing, profit margins, net profit margins, operating profit margins as well. So first up, let's take a look at sales per share. And it's been going down. You're talking over the last 7 years, going from $100 and maybe about $28 of sales per share to about $106. But as bad as the last 2 years have been, I'm surprised this isn't worse. But it is definitely going down overall. Next up, let's take a look at earnings per share. This one's really bad. You're going from roughly about 7 EPS to about negative 14 here in the trailing 12 months there. So definitely going down with all the issues that they've been seeing. Free cash flow per share, same thing, going down. It was up around $9 for cash flow per share and sitting right now around 14 overall. Next up, let's take a look at operating income per share, also going down from about a 10, 2014 to negative around 6 in the trailing 12 months. Next up, we look at book value per share, also going down from 15 book value per share to negative $24. So that is not good, obviously. Next up, long-term debt payoff. So I'd like to see how long does it take for companies to pay off their long-term debt versus their free cash flow. I really want to see the company be able to pay off their long-term debt in less than 3 years. And for a while, Boeing was doing pretty good. Less than a year back in 2014, less than a year in 2018. Certainly right now, the reason why this is actually negative is because they have negative free cash flow. So basically what this is saying is that they just don't have enough free cash flow in general right now to pay off their long-term debt at all, which is obviously concerning with everything that's been going on. Working capital, this is current assets minus current liabilities. Like to see it's positive and going up. So I found this extremely interesting. So it was actually going down from 2014 to 2018 or 2019. And then in 2020, in the last 12 months, look, it's positive. So this goes back to talking about them hoarding cash. So cash is essentially cash and cash equivalents. So it's cash on the balance sheet, but also stuff they can turn into cash relatively easily, like accounts receivable. And so because they're hoarding cash and not really allocating it, they're building up that cash balance. And so that's why we're seeing this huge positive in working capital overall. Next up, we take a look at ROIC and ROE. And historically, Boeing is absolutely incredible at taking, in a positive way, just absolutely fantastic at taking debt financing or shareholder equity and then turning that into net income. I like to see 10% or more when I look at ROIC and ROE, and it's just been amazing. I mean, you're talking 30% to 73% for ROIC, 62% to over 2,000%. I was like, this can't be right. But I looked into it, and it is correct, and that's just because they had a huge jump in net income that year, and they also were buying back shares at the same time, and it really created this huge increase on ROE side. So this company, as far as historical goes, does a great job in managing money and bringing shareholder value just in general. All right, so let's look at some gross profit margins here, and we can see they're going down. So interestingly enough, they were going up from 16% to 19 from 2014 to 2018 with building commercial planes, building planes for the military and some of the government contracts they do. It takes a lot of direct costs. So gross profit margins are just really low in general for these type of companies. But 2020 was actually negative, which is pretty scary. And then the trailing 12 months is around 5%. So you definitely want to see Boeing get back to the 15 to 20% gross profit margins in general. So net profit margin is going to mirror very close to earnings per share, going from around 6% all the way down to negative 14% here in the last trailing 12 months. And then when we look at operating profit margin, same scenario, going from 8% to negative 6%. Next up, let's take a look at my 8 key metrics. And basically what I'm trying to do here is trying to figure out the annual percentage growth for each of those growth metrics from like sales, earnings, free cash flow, et cetera, and also looking at what the average is for ROIC, ROE, and also looking at long-term debt payoff. These metrics are so bad. They're all negative. They're terrible. So I am not even going to show them because they're just so bad. There's really no point. And when I'm looking at this company right now on this particular valuation, I'm really trying to look at the company historically and kind of what they have done and where they can get back to, and does it, and based on that, what type of valuation, should they be valued at? From that. So looking at these 8 key metrics do not really give a good idea of where Boeing, what type of a company Boeing can potentially be, just because the last 2 years have been just so terrible overall. So I'm just not even going to show those. Doesn't really make any sense. Now, as far as shares outstanding goes, the company, has been buying back shares, at least from 2014 to about 2018. And then after that, they kind of stopped. And the reason for that is obviously having issues with the 737 MAX software, and then what happened with the whole market over the last year and a half. They've been really stopped buying back shares and trying to savor as much cash as they can. If we even take a look at dividends, this company is a dividend beast historically, going from almost $3 of dividend payments per share in 2014 up to about $8, and then dropped to $2 in 2020, and then zero in the trailing 12 months. And so this is the reason when I do my return on investment and calculating what I think the intrinsic value of a company is, I don't include dividends and share buybacks for this exact reason. Who would have thought Boeing, 3, 4, 5 years ago would ever get into a situation like this where the market looks so unfavorably on them because of all the issues that they were having, some their fault, some not their fault, to a point where they had to conserve cash as much as possible. So they had to cut back on buybacks and dividends. So that's why I do not factor those into my valuation. This is exactly the reason why. And so as far as valuation goes, I look at a couple of trends. I look at the PE, the acquirer's multiple. I do an intrinsic value calculation. So we're going to look at earnings per share, 10 cap, then also discounted free cash flow as well. So first off, let's take a look at the PE trend. And it's historically, they've really been between 15 and 20, closer to 20, from 2013 all the way to 2018, jumped up in 2019, then crashed in 2020, and they're still negative right now. So that's why we saw EPS being, negative 14 in the trailing 12 months or whatever that was. But historically, from a PE standpoint, 18 to 20, I think is pretty normal for Boeing. Now, as far as acquirer's multiple trend, this company has kind of been between 15 and 20, closer to 20 range. Very similar to PE, falling back in 2019 and being negative right now. And acquirer's multiple trend is EV, enterprise value, over EBIT, or operating income. All right, so now let's talk about expected ROI. In order to figure that out, we're going to jump over to my calculation spreadsheet, and we're going to look at my different valuation methods to calculate the intrinsic value of Boeing. So let's go do that now. All right, so first up, let's talk about my earnings per share calculation. So what I'm trying to do here is come up with an earnings per share and then trying to project out what I think future earnings per share is on what the next 10-year growth is going to be. A lot of times I just take the earnings per share of the last trailing 12 months, which gives me a good idea where they should be at. Boeing's different. They're in the negative right now, so it doesn't make any sense to do that. When I look at Boeing and this particular valuation, and stock analysis, I'm looking at Boeing saying Boeing can get back to where they were back in 2017, back in 2018. And so if we look back in that time period, they were roughly around $18 per share back at that time. So if they can get back to that, which I think they potentially could long term, you're talking, maybe 5, 7, 10 years out, they should be able to get back to that value. And growth rate, I think a growth rate, you can look at this different ways. How I'm looking at it, if I go back to what they have done historically, and if I look at, this is a ticker terminal, and people ask me where I pull my financial numbers. I use Ticker Terminal. I have an affiliate link down below. It doesn't cost you anything to sign up. If you use my affiliate link, you actually get the global screener, which is pretty impressive to use as well. And so if we look at 2006, so they were about 3.6 billion operating income. Up to 2017, they had about $10.1 billion of operating income. That's roughly a 10% growth per year. So I'm going to say, they can get back to that point. And if they get back to that point, they should be producing 10% growth per year. So I'm going to put in here 10%. So based on that, I think the future EPS in 10 years should be around 46 for earnings per share, which put a future stock price of around $933. If I want a 10% return on investment, that would get me a sticker price of roughly $360. Today it's trading at $200. So that is a 44% margin of safety for Boeing. It's really, really impressive. But at the same time, that's assuming that they can get back to where they were, and that would be around $18 of earnings per share. Now, if we go look at a 10 cap valuation, this is what one of Phil Town's valuations that he does. And how this kind of works is you're looking at owner's earnings. So you're trying to figure out what free cash flow is and adding in a tax provision, dividing that by total shares. And then from there, you're multiplying it by a 10, so 10 cap. So essentially, you're trying to have a business generate 10% of its owner's earnings in free cash flow for you, and then come up with the 10 cap valuation. So from there, I get a 10 cap of around $250 a share, and the stock price is 200. So that's about negative 20% margin of safety. So that's looking pretty good. All right, next up, if we take a look at a discounted free cash flow model, essentially what I'm trying to do here is looking at free cash flow, what it should be. And if we look back in 2017, 2018, I'm going to say, if they get back to where they were, that's around $13 billion of free cash flow. So if I take $13 billion, I project that out about 10% growth over the next 10 years, assuming they can get back to a multiple PE of around 15. I'm going to say that the intrinsic value of Boeing is around $420. And that's also using a rate of return around 10%. So that is a 52% margin of safety. So that also looks really good. So you have the 10 cap, earnings per share, and then also discounted free cash flow model. That all says they have a pretty big margin of safety there. Again, these are all inputs, assuming that Boeing can get back to where they are overall. And they're saying in their presentations that they should get back to 2019 levels in 2023 or 2024, and then should have some long-term growth after that. I also like to take a look at payback time. We'll kind of do that real quick. This is also something that Phil Town does as well. And essentially what you're trying to do here is saying, okay, how long is it going to take to get your money back on a company? Phil Town always talks about, he likes at least 8 years or less. That's kind of his mark. And so if I say, hey, Boeing should be able to produce $13 billion in free cash flow, if that's the case and the stock price is $200 today at a 10% growth rate, it's about 6 years. So right here is when I would get my money back in this company. So currently, right now, the market cap's around 117 billion, and so six years from now, it's going to be around 110 billion. So about 6 years out is when we would get our money back for this company. So that is really, really good. Again, assuming that they can get back to those same levels again overall. So now let's jump back to my presentation and we'll talk about what I think the return on investment for this company will be at today's stock price. All right, so we're back on my presentation. And like any other video, this does not guarantee, future results. This is just how I'm looking at Boeing, and this stock analysis is assuming, like I said, this entire video, that Boeing can get back to, where they were in 2017, 2018. So if they can get back to that level, being around $13 billion, even closer to $14 billion where they were in 2018, that's assuming that they can get back to those levels. It's also assuming that Airbus is not going to take, a ton of market share from them. Keep in mind that Airbus over the last couple of years has taken a lot of market share from Boeing. So that's important for Boeing to get some of that back. It's also looking at the government contracts, and they can still be able to achieve those government contracts that they've been able to do historically. They're also be able to not lose any of that backlog that they currently have. So you're talking about $370 billion worth of backlog that's sitting on their books right now. So as long as that doesn't get taken away and potentially moved to competitors, that is really important. This return on investment also does not include share buybacks or dividends. So keep that in mind too. So here we go. So how you look at this is, so if I say the stock price is $230, I would expect a return around 15% per year on Boeing. The stock price is around 150. I would expect 20% return for Boeing. So based on today's stock price of about $200, I would expect around a 17% return on investment. And again, that does not include share buybacks or dividends. So that's pretty impressive. A lot of assumptions going on here, but that would be really, really impressive if that were to be the case. All right, so now let's do a summary of my stock analysis here. So first up, the Moat for Boeing is really incredible. So they have a brand and they have a switching moat. They're a duopoly when it comes to commercial planes. There's not a whole lot of competitors in their government contracting space in general. So they do have a very strong moat overall. They have exceptional ROIC, exceptional ROE historically. I mean, you're talking greater than 50%, a few of the years for ROIC, over 750% average for ROE from like 2014 through 2018. So extremely impressive. A lot of shareholder value there. Historically, they've been a dividend beast, and they have $370 billion of backlog on their books. Excellent ROI, return on investment, that I'm calculating around 17%. Now, as far as the bag go, and there's a lot of things to be concerned with this company. It's the reason why they're trading at a really good valuation. So competition, even though they're a duopoly, Airbus has certainly taken a lot of their share over on the commercial plane side. Travel bans going on, that will continue to hurt Boeing if that continues to happen. It kind of feels like the U.S. and other countries were finally starting to open up. Life was semi getting back to normal again. Also, we hear about this variant this past week, and now there's a lot of concerns about travel bans going on again. Poor market sentiment right now, with the major setbacks that they had from the 737 software issues to the whole Rona situation last year. And it just seems like every time Boeing takes a step forward, they take two steps back. Even a lot of their suppliers have complained about Boeing, their pricing, and some of their strategy that they've taken. So just a lot of issues going on there from Boeing. They're also hoarding a lot of cash. They're not paying their long-term debt off by any means. So there's a lot of concern right now. Okay, do they see the market having a pullback? Do they see more travel bans? Are they preparing for the worst going forward on that front? Will Boeing ever return to their old form? That is the key here. This assumption, this ROI that I'm coming up with, is assuming they can get back to those same levels years down the road. So you're talking, management right now is saying 2023, 2024, kind of around there. They'll hopefully get back to 2019 travel levels that they were. Hopefully, then after that, and then from there, they'll have a trajectory up long term from that. All right. So as far as stock grade goes, if it's thumbs up, is they're going to beat the market, thumbs sideways, even with the market, thumbs down, they're going to be less than the market. I think it's a thumbs up. I think that the Boeing, as long as they can get back to their old form, and what's incredibly important here, at least from how I'm looking at this, is management. If management is competent, right? If they know what they're doing, if they can get Boeing going in the right direction and you can see progress being made, and right now it looks like, they should be able to become positive earners next year, positive EPS. And so if that's the case, things are looking better. And then all of a sudden, a year after that, we're getting closer to 2019 levels. Then probably a year after that, 2024. It should be close to that. So you really want to see quarter over quarter, at least some improvements going on to see if management is competent or enough or not. Because if management is competent enough, I think this is a no-brainer to buy into Boeing. But that is what each investor has to look at and make their own judgment on if management is doing what they need to do to get Boeing in the right direction. All right. So thank you so much for watching this video, guys. I really appreciate it. If you enjoyed this video, got something out of it, please like the video. It helps out a channel a ton. If you enjoy this content, I encourage you to subscribe to my channel. I do want to give a shout out real quick to Movember. If you see that I'm growing a mustache, which my wife hates right now, I've joined a bunch of other YouTubers, Brandon from New Money, Hamish Hodder, Tom from Investing with Tom. And basically, we're trying to bring awareness to men's health. On average, globally, one man every 60 seconds takes his life. And the suicide rate for men is higher than women. And so we want to bring awareness to that. And this charity that we're trying to fund is called Movember. They're trying to reduce the amount of suicides and trying to get men help on that front. They're also focusing on 2 cancers that are specific for men, testicular cancer and then also prostate cancer as well. So if you're interested on knowing more about this fundraising that we're doing, check out a link down in the description for Movember, and I certainly appreciate it. All right. So future video topics I'm planning to do, I'm probably going to do one on the latest Alibaba earnings and kind of what my thoughts are there. I'm going to talk about Ford, Google, Victoria's Secret, Huntington Ingalls, Oracle, Alight, and Nintendo. Now, if there's a stock or a company you want me to look into, drop it down in the section below. I read every single one of those. You never know. I might grab one of those. So thanks again for watching. I really appreciate it. I'll catch you guys on the other side. Take care, and God bless.